No, I don't think it's the death of the dollar yet. But what it is, I mean, look, all of the settlement that used to be done in dollars or the transactions that were done in dollars will now be done in central bank digital currencies. And all of the settlement and, reserves that used to go into treasuries will now go into gold and into commodities. It's a doom loop for the dollar. The more we buy in commodities from the BRICS nations, the more they divest of the dollar and buy gold, which dumps the value of the dollar, pushes up the value of gold, which will be the primary settlement currency. And there is no bull market like a gold bull market.
Chinese investors sold a record amount of U.S. stocks and bonds in May as diplomatic tensions remained elevated between the world's largest economies. Funds in the Asian nation offloaded a net $42.6 billion worth of long-term securities, consisting of Treasury, agency, corporate, and other bonds as well as equities, according to the latest data from the U.S. Department of the Treasury released Thursday. Sales in the first 5 months of this year totaled $79.7 billion, an all-time high for the January-May period. Andy Schectman, co-founder of Miles Franklin, asserts that the U.S. and the West are in a precarious position as BRICS nations divest from the dollar and accumulate more gold. The dollar's value will continue to decline while the value of gold increases. He explains that the U.S. is generating $100,000 of debt every second, which translates to $1 trillion every 100 days, an unsustainable rate. Consequently, the incentive to hold U.S. dollars and treasuries is diminishing. Schectman warns that the dollar is on the brink of collapse. Gold touched a record $2,483 in recent days, but has since reversed lower. The bull run started 20 months ago when the PBOC began adding to gold reserves. It ran into problems last month on the first reports that they had stopped adding to reserves. That news hurt again last week on a report that the buying had dried up for a second month. Reuters reported that China isn't done, citing a policy insider. They would like to bring gold to 10% of reserves from 4.9%, and that would require buying another $170 billion at current prices. That would be about 70% of all the gold mined globally in any given year, and that is 70 million ounces compared to the 7 million China bought last year. Andy Schectman mentioned that while China stopped buying gold 2 months ago, it has been purchasing it through proxies like Shanghai. If their commercial proxy banks buy gold from refineries in South Africa or Switzerland, they don't have to report it to the IMF. Additionally, if the gold they purchase is not 99.5% pure, they also don't need to inform the IMF. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
That China stopped buying gold for 2 months? Well, bullshit, they did. They're buying it through the proxies like Shanghai. If their commercial proxy banks buy gold from the refineries in South Africa or Switzerland, they don't have to tell the IMF. If they buy gold that's not 995 pure, they don't have to tell the IMF. They've been mining between 400 and 500 metric tons for 25 years. They're the largest producer in the world. They don't tell the IMF that. We're supposed to believe they only have 2,600 metric tons of gold. Alistair McLeod says they have 40,000 just in their domestic production alone. And in all the gold that they have been buying through their proxy banks and delivering through their proxy banks on behalf of the PBOC, none of that is reported, so much so the IMF just came out and said China is way understating their gold. Why would they? If gold is going to back a new system, right? He says to me, Vince said that China and India and Russia will do all they can to peg their central bank digital currencies to gold at the same time, because then it will comprise the majority of the currency units within the BRICS plus currency basket. And they're the ones accumulating it all. The 8,300 metric tons the United States is supposed to have hasn't been audited since 53. And when Ron Paul has petitioned to audit it, he's been turned down twice. So I guess what I'm trying to say to you, Danny, is that we are on the cusp right now, maybe the foothills, if you will, of some really scary shit, whereby the dollar is on its way out. I think the death warrant to it has just been signed. And if indeed they do come in October and announce officially that the unit will be their settlement currency of choice, you will see a dumping of treasuries and a dumping of dollars, which will start slowly. Maybe they're already doing it, and accelerate to a degree that we can't believe, because it already is. As China has been dumping treasuries from 3 trillion to 700 billion, Saudi Arabia dumping, Japan dumping, Russia dumped. All of these countries are dumping and they're buying gold instead because it's the only other tier one asset and they know it will be part of this new system and they're bringing it home, like India. So as the West has to find someone to sell their treasuries to because we're creating $100,000 of debt every second, which is a trillion every 100 days, 100, 200, 300, 400, 500. I mean, keep going. And you know, is it absurd? Hell yes, it's absurd. And you know that what's that? $6 million a minute and 60 minutes in an hour. That's 360 million. And you know, I mean, the numbers are just absurd. And they're getting so out of control. And I think it's very, very important to understand that the incentive to hold US dollars is dying. The incentive to hold US treasuries is basically dead. But so who's buying our treasuries? Oh, well, we're supposed to believe it's the United Kingdom. They're going to quickly be number one in treasury holdings. They're a broke country buying our bonds of an even more broke country so that we can pay the interest on the debt we've issued long ago and buy commodities from the BRICS countries who take all of those dollars and used to put them into US treasuries. Instead, they've been selling treasuries and buying gold because it will back a new system. It's a doom loop for the dollar. The more we buy in commodities from the BRICS nations, the more they divest of the dollar and buy gold, which dumps the value of the dollar, pushes up the value of gold, which will be the primary settlement currency. The United States has virtually nothing, the West has virtually nothing in the way of commodity and commodity development. We've mothballed everything. We don't have the commodities that we need. China produces 80% or mines 80% and the Eurasian continent of all the rare earths. And in last year, they refined 100%.
Asian gold demand has been hot through the first half of 2024. Vietnamese and Thai investors flock to gold despite long lines and high prices. Gold is flying off convenience store shelves in Korea, and gold demand in India recently surged during an important festival. Furthermore, BRICS began as an excellent investment opportunity since it comprised some of the world's fastest-growing economies: Brazil, Russia, India, China, and South Africa. They belong to 4 continents, and the fact that all of them were non-Western economies gave them a geopolitical identity as the leading lights of the developing world. Even after its expansion in January 2024, with the addition of Saudi Arabia, Egypt, the United Arab Emirates, Ethiopia, and Iran, Argentina expressed initial interest in joining but subsequently opted to withdraw. The core purpose of what BRICS seeks to achieve lacks clarity. Schectman highlights that this development will eliminate the need to stockpile U.S. treasuries and dollars for settlement, which could push interest rates up significantly. Let's now turn our attention to the video again.
So now gets the interesting part. It's traded over Enbridge, which the US dollar is not compatible with. Saudi Arabia just became a full participant. It will eliminate the ability for the West to sanction. The unit currency, as announced, will be a basket of 60% local currencies of the BRICS plus nations, 40% gold, deliverable in kilo bars. All the gold that's been delivered off of COMEX, it's in kilo bars. Maybe the most interesting part about it, remember all these countries I've been saying have been repatriating their gold? The unit currency will be a token that will be minted in each country. 40% gold, 60% basket of local BRICS plus currencies. That gold, which will comprise 40% of the token and the currency, are taken out of circulation and put into like in essence, an escrow account within the borders of the countries who possess the gold. Now, the gold is deliverable on demand by these countries who will mint their own tokens. So these countries will not have to send their gold to a central location like Beijing or Moscow. They will hold it themselves. It will be audited, significantly audited by independent auditors with tremendous penalties for deviating from the unit protocol. But what it does is it eliminates the need to send these countries gold to any central location like the Bank of England or the New York Fed, the way it used to be, in this case, to a central location for the BRICS. All of the countries, instead of having a BRICS currency, will be able to maintain their own central bank digital currency. Digital yuan can trade with the digital real with Brazil. They can go back and forth, but any settlement done in energy or to whatever degree they want to use the unit token, they will be able to do so with the ability to stand for delivery on the gold backing it. And when you realize that each country will have their own monetary authority and autonomy, the ability to trade over Enbridge, which is not compatible with dollars, which allows countries to maintain their own monetary autonomy and settle in a gold-backed currency, if you will, that they hold within their own borders. Well, do you think there's any coincidence with the massive accumulation and repatriation of everybody's gold when Project Enbridge is backed by the BIS, who did the exact same thing right before they reclassified it Tier 1? What this will do will be completely eliminate the need to stockpile U.S. Treasuries, which will push rates to the moon ultimately, and it will completely eliminate the need to stockpile U.S. dollars for settlement.
The US dollar continues to cede ground to non-traditional currencies in global foreign exchange reserves, but it remains the preeminent reserve currency. The West is in a precarious position as BRICS nations divest from the dollar and accumulate more gold, causing the dollar's value to decline while gold's value increases. Additionally, China still has plenty of appetite for official gold purchases despite pausing in May and June, as its bullion holdings remain low as a share of reserves and geopolitical tensions persist, according to a policy insider, industry experts, and data. Will gold become the next global reserve system? We want to hear from you. Feel free to leave your thoughts in the comments. Give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.